Today, I don't want to give a cliché lesson that's useless. I want to teach you a real trading strategy that when you open the chart, it gives you a real trading opportunity. A strategy you can actually make money from. Every day when you sit at the chart, it gives you one trading setup. I want to explain this personal strategy from 0 to 100. How to trade, what time to trade, what time not to trade, where and when to enter and when to exit, step by step and in full detail.
And most importantly, I want to teach you how to multiply a small account. So at the end of the video, I will give you a real risk and money management plan that can actually do this without fake show-offs, just with 2 trades and without any extra risk on your capital. I will prove to you that it's possible. Just watch the video until the end.
For Iran and for our dear friends who are no longer with us. The strategy we are going to use every day is based on one of the FVG trading setups. It works based on FVG, and most of you probably already know what it is and why it forms. For that 1% who don't know, FVG means a gap between 3 candles where the middle candle is not covered by the candles on the sides, even with their wicks. Here is an example. This is our middle candle, and it is not covered even by the wicks of the side candles. This gap that forms from wick to wick of the side candles is the FVG. To make it easier for you, I use a helper indicator that shows only the first FVG that forms each day in the same time frame, and it does not show any other FVG during that day. Exactly what we want, to trade only the first FVG of the day. The name of this indicator is FVG Sessions from Lux Algo. Add it from the Indicators section on your chart. You will see something like this on the chart. Each day, one box appears as the FVG, colored red or green. It also shows the daily high and low live. Now, how do we trade? Pay close attention to this part. First, open the 1-hour time frame on Euro USD. This strategy works on all markets, and you can use it anywhere, but make sure to backtest first. On this time frame, the indicator shows boxes like this. Let's look at a sell example. If you look at the FVG concept, this is candle 1, this is the middle candle, and this is candle 3. The middle candle is not covered by candles 1 and 3, and after this candle closes, the box appears. We manually mark it with a box so we can prepare for the trade. Important note, red boxes are for sell trades and green boxes are for buy trades. The reason is simple. In a bearish trend, when an FVG forms, it shows strong bearish momentum, and when price returns to it, it's good for a sell. In a bullish trend, it's the opposite. After drawing the box, extend it to the right. Turn off the indicator and move to the 15-minute time frame for execution. The indicator must be off so it doesn't mix with FVGs from that time frame. On the trigger time frame, find that same box. This is an ideal box for trading because it has a good size and price returns to it exactly during the London session. The best time for this strategy is London session. It does not work well during New York session. When price reaches the box, wait for a confirmation candle that closes outside the box. After that confirmation candle, enter a sell trade at the open of the next candle using a market order. Place stop loss safely outside the box. For target, if you are risk tolerant, find a strong technical high or low and use it as your target. I say if you are risk tolerant because strong highs and lows are usually far, but they give high reward and price has the ability to reach them. Here, even though it took time, the take profit was finally hit and gave a 4R reward, which is excellent. This strategy with the money management plan works like magic. Keep this in mind. Choosing a higher risk-to-reward ratio reduces your probability of hitting take profit. Let me put it this way. For larger rewards, like 1 to 4, if you manage to hit 2 or 3 trades like that in a month, you've done something exceptional. But with the golden 1 to 2 reward, you can take more trades during the month and steadily collect profits step by step. This approach gives you a higher probability of reaching your take profit compared to the first method, and it will naturally build more confidence and consistency in your trading. Ultimately, the choice depends on your trading personality and which style aligns better with your psychology. Now, let's go back to the 1-hour time frame and turn the indicator on again. This is a buy example, and as usual, the signal appears during London session. Draw the green box the same way and go to the 15-minute time frame. Price moved away a bit but quickly returned during London session. Now, wait for a confirmation candle. Look carefully for a candle where price clearly leaves the box. Like here, candles moved out of the box. At the next candle, enter using a market order. Stop loss goes below the box and under this wick for more safety. Now we have 2 take profit options, one normal target with 2R, lower risk, and one aggressive target at this strong high which has strong price attraction. If we chose the risky option, we would get 4R. If you get just 3 to 4 trades like this per month in sequence, you can make very good profit. You ask how? Let's go to the risk and money management plan. For this plan, your balance should be small. Do not do this on a big account. Before that, if you like the strategy, please like the video and subscribe so you don't miss new strategies. On the first trade, risk 4% of your total balance. If take profit hits with 1 to 4 risk to reward, your profit becomes 16% of your total capital. Now on the second trade, instead of risking 4%, risk only that 16% profit you just made. If take profit hits again with 1 to 4 risk to reward, your profit on the second trade becomes 64%. Yes, you heard right. 64% profit on the total capital. Add the first 16% profit and you get 80% profit with only 2 trades. Big and unbelievable numbers, right? Watch this part again. We didn't use any tricks. All numbers are real. The interesting part is that we never risked extra on the original capital. We only risked the profit. The capital itself did not take extra risk. Important. You are only allowed to increase risk if the first trade closes in profit. You risk only the profit from the first trade in the second trade. If stop loss hits, you are not allowed to increase risk. You continue with 4% risk until you get a winning sequence. Now go and backtest it. See you next time.